What's up YouTube, it's your boy Rhett back at it again with another video, and today we're talking about my favorite thing to talk about on the internet, Bitcoin. The price doubling in the last month, Bitcoin has gotten a ton of new media attention, so there's a lot of beginners coming into the space. So I thought today I would make a video targeted just for beginners. We're going to talk about what accounts you need to buy Bitcoin, we're going to talk about when you should be buying, and we're going to talk about how to time the market. Spoiler alert, no one can time the market. You're going to get at least 7 smarter from watching this video, I promise. Additionally, none of this is financial advice. I'm just a guy with above average IQ sitting in my room with a Kanye poster, and I have my own experiences from buying Bitcoin every day, and that's what I'm sharing with you. I'm not a financial advisor or anything like that. So let's just jump into it. You're going to learn so much. Stay tuned. First things first, if you're in the United States, you're going to want to open an account with either Gemini or Coinbase. I've used both of them. I use Coinbase Pro for the most part. I'm thinking of switching over to Gemini. Both services are really great. I think Gemini's interface is a little bit better, and their fees might be a little lower depending on how you're trading. So really you can't go wrong with either Coinbase or Gemini. They're both highly respected companies, really great security on both of them. They both have API access, so you'll be able to do automated trading if that's something that you're interested in. And they have very low fees if you trade in an automated fashion, which is going to be my recommendation to most of you. It's important that you fund it with an ACH transfer and not a credit card or a debit card. Do not buy Bitcoin with a credit or debit card. The reason you don't want to buy Bitcoin with a credit or debit card is that they're insane fees. I think it's 3+% on Coinbase and Gemini. This just isn't worth it, especially when you can avoid it by just setting up an ACH transfer, which is totally free. So make sure you're not buying Bitcoin on a debit or credit card. Make sure that you're avoiding those unnecessary fees. The only thing dumber than paying fees when you could have avoided them otherwise is not smashing the like button for the YouTube algorithm. I will be forever grateful to you if you go smash the like button for the YouTube algorithm. And it's also going to help spread my message across YouTube to help other people not pay stupid fees when they don't need to pay them. So go ahead and do that, and let's make the world a better place together. Thank you. So once you've funded your Coinbase or Gemini accounts, you're going to be ready to start trading your US dollar cash into Bitcoin. And the first thing I recommend people to do here is to make a small initial purchase just to get some skin in the game. The big problem with Bitcoin that I see is that I think it still comes off as a little scammy, and I'm trying to be sort of conscious of that. I don't want to ever come off as scammy, and I don't want to tell you guys to do something that you're uncomfortable with. I think it comes off as scammy because a lot of the people in Bitcoin are very overzealous, and it seems like they're trying to sell you on something that maybe you don't totally fully understand. I think the best way to combat this is to just make a small initial purchase, whatever you're comfortable with. Most of my purchases are only $10 or $20, so you could even start with something really small like that. And once you have some skin in the game, you're going to be relying a lot less on people like me trying to get you into Bitcoin, and you're going to see for yourself the massive price upside if you can create a long-term investing strategy and then stick to and execute that strategy. I can tell you how great Bitcoin is all day, but you're not really going to get that in the same way that a lot of us that are already in the community have gotten that until you see how massive your returns will be relative to some of your other traditional investments. I know I wasn't totally sold on Bitcoin until I saw it drastically outperform my IRA and my 401k and all of my traditional investing accounts. And that's why I think it's really important that you just make that initial buy and just put some skin in the game. Make it something that you're comfortable with. Definitely don't put in too much money if you're not comfortable with it, and if you don't really believe in Bitcoin, just put in a small amount just to get some chips on the table and to understand what this community is about and what the investment is about. There's absolutely no need to put a huge amount of money up front. Bitcoin is going to be here for a long time, and it's important that you keep a long time horizon for yourself, right? This is not a 6-month investment. This is a 10-year, 20-year, 30-year, the rest of your life retirement kind of investment, or that's the way I see it. So go ahead and make that small investment, and then you'll start to become attuned to some of these large price swings, and you'll realize, how valuable this is relative to some of the other investments that you've been making probably are. Usually when I get to this point in the conversation with people and Bitcoin is at or near an all-time high, they'll say something to me like,
"But Rhett, Bitcoin is $40,000 right now. Why should I invest the all-time high? Shouldn't I wait for it to just come down a little bit and invest my first time then?"
And that's where I kind of agree with them. I totally think that Bitcoin, this is not the last time that we're going to see Bitcoin below $40,000. I totally think that it will dip below $40,000 at some point. But you can never really be sure. And that's why I think it's important to just get a small buy on the table and to start setting up a schedule for yourself for recurring purchases. Buying amounts on a regular schedule like this is called dollar cost averaging. Dollar cost averaging is a great risk limiting long-term strategy because it gives you all the different exposures to the price fluctuations of an asset. So you're going to be buying at the absolute highs, but you're also going to be buying at the absolute lows. To illustrate why this is important, I had a friend who, back when gold was making an all-time high in late 2020 or mid 2020, he went and he took $5,000 and he bought a position in gold. And then over the next week or two, it actually lost money, and so he was out hundreds of dollars right away. And actually since then, the price has never recovered to the price that he bought at all-time highs. And unfortunately, this is what happens to a lot of people who get caught up in media hype and end up buying at all-time highs because the media is pushing stories over and over and over again. And a lot of the people that are just coming into the space are buying at all-time highs, and they sometimes put in huge amounts and then they get crushed. So what my friend could have done to totally avoid all of this is he could have taken his $5,000 and separated it out over 100 purchases. And he could have made 100 small purchases of $50 each and slowly built up a $5,000 position into gold. And what this would have done is when he was at the all-time high, he would have bought a small $50 purchase. That small $50 purchase would have lost him money. Then when the price crashed, he gets in at this lower price. If the price crashes again, he gets in at this lower price again. And then if it comes up a little bit, not quite to the level of the all-time high that he bought at, but it comes up just a little bit, those two dip prices that he bought at down here are now making him money. And so if he had done this over a long period of time, he'd actually be in a lot better of a place than he was buying a bunch at an all-time high. The most difficult part about doing this dollar cost averaging is what happens if the price of what you're buying totally crashes. It takes a lot of conviction and a lot of belief in what you're doing to continue to buy after the price has totally crashed. And this is what happened to me in 2018 after Bitcoin crashed the first time. I was not seeing as many media stories about it. I didn't have a really strict schedule for when to buy it. I told myself I would buy it every month, but sometimes I would just forget. And I didn't have anything automated, so there was no backup for me if I forgot. And what ended up happening is that was actually one of the best times to buy Bitcoin. The price was really cheap. I would have made a lot more money if I had continued to buy very strictly through 2018. Unfortunately, I didn't, and that's a cautionary tale for everyone. Keep your convictions and make sure that you stick to a very strict schedule, and those very difficult buys that you have when the price is low are really going to pay off for you long term. And what's even better is if you can fully automate those buys. Then you're not even thinking about it. You're not even thinking, oh, there aren't any stories in the media. I don't really feel like this Bitcoin thing is really going to work. If you fully automate your buys, it's a lot less effort than having to go on every month and buy something. So what I've done is I've written a full guide over at ret.blog, my blog link in the description, to automate your Coinbase purchases with the Coinbase Pro API and a simple Python script and some AWS stuff. I'm going to be building out a Gemini version of the script in the next few weeks or months because I think that their fee structure is a little bit better. So if you're looking for something like that, stay tuned. I'm going to post another piece of content over at ret.blog. If you want to go subscribe to that, you can throw your email in there and you will get notified of whenever I post a new blog post. And if there's enough interest, go ahead and put a comment in the description that you want to see the Gemini version of the Python script, and I'll make sure to make a video once I have completed all of that development work. So now that you have a very strict dollar cost averaging strategy, you can start to recognize when to buy them dip. I built the Python script over on my blog in part to automate my purchases, but also in part to find out how much money I'm actually making from these Bitcoin purchases. So it actually takes all the transaction details and throws it out into a Google spreadsheet, which is also available in that blog post. It's a very easy and simple way to track how profitable these purchases have been over time. And then secondarily, what it allows me to do is it shows me my cost basis or my break-even price, and it allows me to identify really good buying opportunities. So let's say I bought $100 of Bitcoin last month when it was 20,000 and $100 of Bitcoin this month when it was 40,000. That would make my cost basis $30,000. I have that in my spreadsheet. I see that my cost basis is 30,000. Now if the price dips to 25,000, I know that that's a great buying opportunity because it's going to allow me to lower my cost basis and get more Bitcoin for cheaper than the average price that I've paid for Bitcoin. Keeping data like this is not helpful just for Bitcoin purchases, but it's helpful for all the purchases that you make in your financial life or in your investing opportunities, stuff like that. I keep the records for my 401k, I keep the records for my IRA, I keep the records for just general stock purchases, and it really helps me determine when I'm buying something that's overpriced or underpriced relative to my past history of buying. Once you've collected enough data on your purchases, you're gonna have a really good idea of if you're buying an asset that's overpriced, or if you now have the opportunity based on the current price to buy something that's really underpriced relative to what you've been buying at. I did say earlier you can't time the market. That's the best way to time the market. You don't know if at that point the price is gonna continue to fall or if it's gonna come up, but you do know that it's a good buying opportunity based on your existing break-even price. So then all you have to do next is HODL, hold on for dear life. A lot of people have asked me what my price is that I'm gonna sell Bitcoin at, and I think I'm at the point where I've decided that no matter what the price, I have no plans on selling any of my Bitcoin. If I ever need cash for some reason, I might take a loan out against it over at BlockFi or a company like BlockFi. Link in the description for BlockFi. They allow you to take out US dollar loans against your Bitcoin as collateral. So you would give them maybe $5,000 of Bitcoin and they would give you $500 of a USD loan. And you can see all the terms and details of that over at BlockFi, link down in the description. It's a service that I've used for their interest-bearing account product that I really like. It gives me 8.6% interest on my Bitcoin and my stable coins. So a really great product, and I think that the lending product, I haven't used it yet, but products like that are very attractive in the Bitcoin space because it means that you never have to pay capital gains on selling your Bitcoin. If you ever need US dollars, you now have a second option. You can avoid capital gains tax completely by not selling your Bitcoin. You can actually lend it to one of these financial institutions like BlockFi, and you can instead pay the interest on the loan that they give you. The reason that this is great is that you're not selling the underlying assets. So you're not ever dealing with capital gains, and at the end of the day, you still have your Bitcoin. And if you believe, like I do, that the real inflation rate of the US dollar is not 2%, but it's actually closer to 15 or 20%, it just makes a lot of sense to stay out of fiat as much as possible. I was actually listening to a great podcast last week between Robert Breedlove and Michael Saylor, who's the CEO of MicroStrategy, which is a company that just recently bought up $1 billion of Bitcoin to put on their corporate balance sheet. And in that podcast episode, Michael Saylor was talking about the way that generationally wealthy real estate families actually get access to liquid cash when they need to purchase things is they don't sell. If you own a block of real estate in Manhattan, you don't ever want to sell that block of real estate. So what you'll do instead is they'll take out US dollar loans against the real estate, because then at the end of the day, even if they can't pay back the loan, they own the underlying real estate asset. And so at most, the bank is going to just take that away from them. Worst case scenario. And what might happen is the price of the underlying asset might increase, and then their loan is for an even lesser percentage of the underlying asset. So if you really believe that your underlying asset is going to increase exponentially versus the value of fiat, it's a really great trade to make. And that's how some of those families that own real estate in places that have just appreciated out the wazoo, like Manhattan, have managed their money. They don't want to ever sell that real estate because the capital gains taxes of selling the real estate would be astronomical, because they acquired their real estate, or their great-great-grandfather acquired the real estate back when the cost basis on the real estate was almost zero relative to what it is today. So that's it. That's how you're going to get started building up your Bitcoin position. You're going to open the account. You're going to make a small initial investment, whatever you are comfortable with. That's going to allow you to just filter your brain and get fixated on what the price is and to understand it for yourself so you don't need to listen to people like me for advice. Then you're going to set up a dollar cost averaging schedule that's really strict. The hardest part of doing this dollar cost averaging schedule is going to be if the price starts to fall rapidly. You're going to say, oh, this is a stupid investment, led me astray, blah, blah, blah. And you're not going to want to buy. But then 4 years from now, when the price totally exceeds what you bought it at today, you're going to wish that you had bought more when the dip happened. Fourthly, because you're tracking those dollar cost average purchases in your spreadsheet and you know what your cost basis is, you're going to buy them dips. You're going to be able to identify what the dips are because eventually the price of Bitcoin will fall below your cost basis of Bitcoin. And when the price does fall below your cost basis, you're going to recognize that as a good opportunity to lower your cost basis. And then finally, you're going to hold on for dear life. This thing is a rocket ship, and it's going to take us all to the moon or Mars if Elon Musk gets involved. You could be like me and you could never sell, or you could totally take profits. Lots of people do sell their Bitcoin. I don't think it's a good idea. At this point, when you sell your Bitcoin, you're very likely likely selling it to a massive institution like PayPal or Square, who are never going to sell it back to you. That's what I think about every time I think about selling. I think about how expensive it's going to be to reacquire this Bitcoin at some point 5, 10, 20 years into the future. As soon as some of these public companies start to do what MicroStrategy did and list it on their balance sheets, you're not just going to be competing against me and other retail nerds for Bitcoin. You're going to be competing against Apple. You're going to be competing against Microsoft, and you just don't have as much money as those companies. Once Jeff Bezos puts $1 billion into Bitcoin, what's going to happen? You know, who is going to be selling Bitcoin then? It's not going to be. There's going to be a point where it's going to be very, very expensive and difficult to get it back from these institutions. And right now, I think we're at the early innings of still being able to accumulate as just normal little retail guys, because these institutions have not flooded in yet. So those are sort of my current thoughts on Bitcoin. You can use this exact same strategy to dollar cost average and hold your way into any other financial instrument. You can do it with REITs. You can do it with Apple stock. You can do it with bonds. You can do it with Ethereum. You can do it with index funds. You should be able to do it with really any liquid asset that you can trade a lot. You can do it with gold, but why would you buy gold? You could just buy Bitcoin. You could even do it with GBTC, which is the Grayscale Bitcoin Trust, which is an ETF-like Bitcoin product. It has really high fees and it has a really high price premium, but if you don't want to deal with opening a Coinbase or a Gemini account, you can just go into your brokerage and buy GBTC for yourself. It's a quick and easy transaction. You don't have to figure out, how am I going to custody this Bitcoin, or any of those complex questions. You can just go ahead and get it right there. I don't own any GBTC, but I have friends that do, and they like the ease of access and that they can hold it in their normal brokerage account. So that's sort of the use case there. So if you made it this far into the video, go ahead down below, leave a like. If you were confused by anything that I said, or if you want me to talk more about any of these topics, go ahead and leave a comment. I do respond to all the comments. And then go subscribe and hit the notification bell to become a part of Monday at 10 a.m. Eastern Squad. Monday at 10 a.m. Eastern Squad gets a new tech, money, or success video every Monday at 10 a.m. Eastern, delivered straight to their phones. What could be better than leveling up your brain with me, the above average intelligence person who is in his room hanging out with a Kanye poster? What would you rather be doing Monday at 10 a.m. Eastern? Please let me know. I don't think that there's anything better that you could be doing. So go hit subscribe, hit the notification bell, and you're gonna get notified of all of these great videos when they come out, and you're gonna get really, really smart. All right, that's it. I love you all. See you next week. Goodbye.